What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market, and we're also going to be covering the SoFi stock. If you find any of this information useful, be sure to subscribe to the channel and be sure to smash the like button, and don't forget to drop a comment. Guys, as I'm filming this video right now, since SoFi has been a publicly traded company in the stock market, they have reached the highest short selling, volume or amount today. Okay, the highest level of being shorted has happened finally today, guys. And when I show you these numbers, it is absolutely insane. If you're wondering why the SoFi stock continues to fall, it has nothing to do with SoFi as a company, because SoFi put out great Q4 guidance, and also the management team, completed what they told you they were going to do. They got a bank charter license for you heading into 2022. The reason why the SoFi stock continues to fall is because average retail investors continue to get pushed out of their shares, selling for a loss, and also people gambling on short-term options because the short interest is absolutely insane. The higher ups, the billionaires, the hedge funds are shorting companies as a hedge, small caps, penny stocks, growth stocks not profitable like a SoFi. They are shorting these companies to the lowest possible prices they can get them at, until the market turns. And that's what's happening right now. And I'm going to show you those details in this video. Let's get into it. All right, guys, as we can see, we were doing extremely solid. The past couple of days, the NASDAQ was reversing extremely solid on the 1-year chart. But we just came to a huge roadblock because Facebook has fallen off a cliff, putting out bad guidance. Even though a lot of our other mega caps did solid, Facebook is a $1 trillion company, and tons of billionaires have this company as a large part of their indexes. We're down 3% today on the NASDAQ. Facebook is falling off a cliff. We can see Facebook right now is down 26%. I mean, guys, that is literally $250 billion of market capitalization wiped out. And we also have other companies following, Facebook. Snapchat is down 23%. As I'm filming this video, they haven't even reported their earnings, so they're down 23% as well. Spotify reported their earnings yesterday, having trouble with the user growth or something like that. 16% down. So absolutely, plummeting today, all these growth stocks. And we can see SoFi stock is down 6% today. No news at all. Just got the bank charter license. Just completed the acquisition of Golden Pacific. Nothing but good news. Company is setting up for a great Q4, and I expect huge guidance coming in 2022 as well. Now take a look at this, guys. We have 17% short interest. Short interest is increasing today. 2.5%, 105 million shares are sold short out of the 800 million total outstanding shares. So this is absolutely insane. Almost 1/5 of the company is being shorted right now, guys. And just a couple of hours later, you see this 17% short interest. The short interest is going even higher, 17.26%, 4% increase on the short interest, now up to 106 million shares. That is why the SoFi stock is falling. There is some big money out there. I believe it's, the banks, people investing in the banks, shorting the crap out of SoFi. And I think the only thing that can get the stock moving is a great earnings report, and more investors that are, not behind the banks buy up the SoFi shares. So that's what's going to happen. Just because banks are betting against SoFi and see SoFi as a competitor and the short interest is high does not mean that other investment firms will not continue to buy the SoFi stock. We see Oppenheimer, we see Mizuho. There's tons and tons of other, organizations out there that are willing to buy growth stocks. Not every single, investor is 100% backing, big legacy banks. So as you guys can see, short interest has hit the highest level all time. I've done 4 to 5 videos for you. Short interest is at 10%, 12%, 13%. Going back to November, December, it is going higher and higher. We need to get to earnings, guys, because this is absolutely incredible that they're able to get SoFi to these low of levels. We're talking levels that we were at 14 months ago when we went, public, to the market. So as you guys can see, this is why the SoFi stock continues to fall. Now it has nothing to do with the company. And guys, also another, kind of fintech slash legacy company, PayPal, they closed down 24%. They actually dropped 29%. Worst trading day ever. And if we just scroll down, you can get a little bit of the details into the earnings. And it says they anticipate revenue growth would be about 15 to 17% for the full year. Guys, that's not a lot of wiggle room, okay? What if they don't hit those numbers? You're talking 10% growth. So that's why these companies continue to fall. We also have Facebook. If we just scroll down a little bit, We can see the CFO outlook 3 to 11% year-over-year growth for 2022, guys. These are extremely low outlooks for guidance, and that's why these stocks absolutely collapsed close to 30%. SoFi, on the other hand, now that they have, completed their bank charter acquisition with Golden Pacific, got the license, EBITDA projections are expected to explode. 1000% gain in EBITDA, guys. You're talking 40 million to an increase of a potential, 400 million plus in EBITDA. This is absolutely insane growth. When you're talking about a company going towards profitability, also having, crazy, crazy growth. We have the Super Bowl coming up, guys. This is going to be an impact to 2022 guidance when they see how many, people they can rack up to the platform, those couple of days heading into the weekend of the Super Bowl. So that's why I believe they pushed their guidance out a little bit further. Let this FUD bring the stock down as low as possible. Let all of these companies flop on their earnings, flop on their guidance. And then once all of that noise is quiet, we can hear SoFi's, outlook clear, listen, and see what's going on for 2022 with this bank charter license. If the company's outlook is looking like their investor presentation, you're talking about a 1,000% increase in EBITDA projections, guys. That's absolutely insane. Falling about 60 growth stocks today, we could see Facebook, Snapchat, Spotify are at the bottom, 26, 23, and 15% loss. Square is actually down 11%. I believe they're following, PayPal. Everything is getting hammered. We're talking 7, 7, 6, 6. SoFi down 6. Dozens and dozens of companies in the 5s, 4s. In the green today, believe it or not, you only have Robinhood. And we already know Robinhood put out a pitiful Q4 earnings report and also a pitiful Q1 guidance. They're not even going to be able to reach their 2021 comps at all because of those, trading volumes for the payment for order flow. So this is absolutely incredible when you're talking about a company like SoFi down to these levels. I mean, I think SoFi is an amazing buy. 9, 10, 11, 12. It really doesn't matter. If you plan on holding this company for the next, 2 to 3 years, you're going to see significant upside when you're talking about a company, growing profitable extremely soon, also growing members. And they have a well-diversified business model, guys, okay? They have been pivoting away from the student loans. Remember, student loans have been pushed away for almost 2 years now. The company has been, pivoting away from student loans for a while now, so I see extreme upside. And we are selling off into the close. And we also have, so you guys can see why some of these legacy dinosaurs are, falling off 29 and 26%. It's because the revenue growth outlook is very minimal. PayPal 15 to 17% growth, and Facebook 3 to 11% growth. That is not a lot of wiggle room in case, roadblocks, hit in front of them. So not a lot of upside at these levels. Facebook, that's why they're down, a third. 3% growth is very low. JP Morgan reported 1% growth. Goldman Sachs 8% growth. So as you guys can see, these legacy companies, growth is very, very minimal. Once you become a company that large, it's very hard to stay on track and continue to grow when you're at that level of market share. All these companies are, $200 to trillion industries. SoFi, on the other hand, is expected to have, 50 to 60% revenue growth in 2022. Bank charter is now completed. A 1,000% increase in EBITDA projections. That's a jump from 40 million to 440 million in 2022. This is what you want to see, from a company, trying to get profitable, also growing at the same exact time. So, they have more upside than all of these companies combined. And we're also not a very, very small company. I mean, we're getting into the 1 to 2 billion revenue range now. So when you're growing 60% and you talk about, let's say PayPal growing 15%, that's 400% faster growth, guys. 50% to 60% is 4 times faster. So that's like 4 years, of upside onto, PayPal's outlook for this year. I know they're a lot bigger company, but guys, growth is slowing extremely fast and SoFi continues to accelerate. And we are at about a 9 billion market cap right now. We've seen this stock dip into the 8 billion market cap range. I mean, you're talking absolutely insane growth, guys. If this company reports 1.5 billion in revenue, we're trading around 6 times sales, for 2022. That's pretty darn good when you're talking about a company growing that fast, at 50 to 60% growth, and could potentially be profitable by the end of the year. So I just think the bank charter license is going to have an amazing outlook for 2022. I mean, imagine if we get, a summary title on all these websites when the earnings come out. SoFi beats, revenue and EPS. Guides for a massive 2022 outlook with revenue accelerating and EBITDA, timesing by 10. Okay, if we get that type of outlook, this stock could rally, anywhere from 30 to 40% on earnings. We already saw the last earnings, we actually popped 20%. Just the market sentiment got extremely bad and we sold off. But the last earnings had a 20% pop. If the market gets better and the inflation slows down in the back end of the year, SoFi could easily be a $30 stock by the end of the year because they have an amazing outlook heading their way. Unlike, a PayPal, unlike a Facebook, and unlike, Goldman Sachs and JP Morgan, which barely has any growth at all. So this is where I believe people should be in right now at these levels. I understand we're at, the bottom of the barrel when we're talking, 14-month lows. These are the times to be buying if you are confident in this company, in the long term. And if you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing this video for you. I just want to let everybody know the reason why the SoFi stock is really dropping. It's not the outlook on the company. It has nothing to do with student loans. It has nothing to do with the bank charter license, okay? All of that has been taken care of. Student loans have been pushed back for 2 years. The bank charter license is complete. SoFi is expected to have a great Q4 and also a great 2022 outlook. Guys, the reason why the stock is down is because the market is selling off these large mega caps that are reporting terrible 2022 guidance, and the SoFi stock, along with thousands of other companies, are being shorted into the ground. These hedge funds are either protecting their downside risk, hedging on the way down, or also just trying to protect the legacy banking industry, to not lose market share. So once again, my name is Kyle. I hope you have a great day.